So continuing on with the RSP scenario, basically, you don't necessarily have to put in your entire contribution into your own RSP plan. Okay, you could in fact put it into your spousal RSP as well. And the reason for that is primarily for splitting of income. So why would we want to split income? Well, the primary reason, of course, is to reduce the total tax per couple. So, for example, if I'm in a high marginal tax rate, and say, and my wife is a stay-at-home mom or whatever else, she's in lower tax bracket, it'd be really, really good if I could move money from me over to her, because by doing that, I reduce the amount of tax I have to pay. Her amount is low tax, 15%, let's say, is her marginal rate. Mine's 45%, so quite a difference in the two. So if I can move money from 45% taxable rate to a 15% taxable rate, why would I not do that? Okay, and that's the whole idea, basically, of the splitting of an RSP, is that it reduces the total tax for a couple. Okay, the other thing you got to remember is that at the other end, when we're both, let's say, 65. And we're getting old age security and everything. If all the money is coming to me, so therefore I have, let's say, $120,000 coming in every year as income, I'll lose my old age security. Okay, remember that old age security is subject to clawback. Okay, OAS is subject to clawback. So in order for me to avoid the possibility of going above the clawback number, which is roughly in the neighborhood of around $74,000. So for every dollar above that $74,000, the clawback is 15%. So if you sort of extrapolate that, roughly about $119,000 to $120,000, the OAS is completely wiped out. So what if I could turn around and rather than have $120,000 to say coming into as my income, I would be able to split that 50-50, let's say, with my wife. In that case, then we'll be well below the threshold, and we both would get the old age security. So part of the reason for splitting of income, like I said, is not only to reduce the immediate tax implications right now, but also to a situation at the other end when we're both retiring, and that basically the clawback for the old age security. So those are two primary reasons for that. But regardless of all that, remember, I'm the one that's actually contributing all of this. So let's say that I've got $20,000 that when I did my 18% formula and all that sort of stuff there, I was able to put in $20,000. So I can take the entire $20,000 and say put it into my own plan. I can take the entire $20,000, put it into my spousal plan if I want to, okay? Or I can split it any way I want. The point is, okay, is that the contribution is based on the contributor's room. In other words, this is not based on my wife's income, it's based on my income. And so therefore, it's that 18% rule applies to me. So the fact that I want to put it all into my spouse has nothing to do with her contribution rule. She may, and actually, in fact, she may end up having her own RSP. Let's say if she has income of her own, she can certainly do that. And my contribution to spousal RSP has no impact on her contribution, okay? Only has an impact on mine. So let's assume, just for simplicity's sake, that we split it 50-50, basically. So I still take the entire $20,000 deduction from my taxes and everything else. My wife does not take it. Okay. However, we have split the income. So that way, at the other end, when the income arrives, okay, again, we're both in a different tax bracket, so it could save us a considerable amount of taxes and everything. And don't forget that the clawback provision as well. Okay. There is one caveat. Okay, there is one caveat, and that caveat is, again, attribution. Remember that between spouses, there could be attribution, which basically means that something goes wrong, then the contributor is responsible for the tax. So again, the general rule for spousal RSPs is that if you make a withdrawal, so if my wife makes a withdrawal during the current year plus 2 years, in other words 3 years basically, any amounts of money that I put into the spousal RSP for this year plus 2 years, so let's say 3 years, any of that money gets basically canceled or sucked up by my wife and everything else. Okay, who's going to pay the tax on that? So let's give you an example. So let's say that in 2013 I put in $10,000. Remember, I had $20,000, right? So we decided to split 50-50. So 2013, I took $10,000. I put it into her plan. 2014, I put another 10. 2016, another 10. In 2017, I put another 10. Okay, and so therefore, we've got a total of $40,000 that I've actually contributed to the spousal RSP. She decides in 2017, before December 31st, 2017, she decides, heck with this, I don't want this anymore, I'm going to cancel, I'm going to withdraw, I'm going to do whatever, all of it, portion of it, whatever. Let's assume she just canceled the whole bit, basically, okay? What will happen is, the last 3 years contribution that I made, so 2014, 16, and 17, that will be taxed to me. So even though my wife will actually get the premium back, remember we're talking about the money that's being contributed, not the earnings. That's a separate matter. That'll be taxed to her. So if that 40,000 is now 50,000, let's say, in other words, we made $10,000. That's her responsibility as far as tax is concerned. So all we're talking about is the contribution itself. Okay? So I contributed this $40,000 in those 4 years. So that's all we're talking about, not the earnings. And so therefore, that $30,000 that has been basically sucked out, so she canceled the entire thing. The $10,000 that was beyond the 3 years, that'll be her responsibility. And so she will have to pay tax on that $10,000 withdrawal, okay? But the money that's withdrawn, the money that would be put into current year plus 2 years, let's say 3 years, that will all be attributable back to me, okay? And so that's something that you have to be very careful about, is that if in the event that your spouse, due to a marital breakdown or whatever, that the spouse ends up actually cashing out the RSP, any amounts of money that are taken out within the current year plus 2 years, so in other words, 3 years, basically, your spouse will receive the check. That's not a problem. She or he will get the money, basically. But you, the contributor, will get the tax bill. In other words, all that money will be fully taxed into your hands. Okay. And once again, your spouse, when she must annuitize the money, but no later than age 71. So the rules still apply, whether it's a spousal RSP or whether it's your own personal RSP, the rules are still the same, that no later than age 71, you must annuitize that money. And of course, you can do it any time before that, but you cannot later in later than age 71. So that basically summarizes the whole question of spousal RSPs.